everybody, and welcome to this month's VectorVest International Forum. My name is Susan HayesCulleton, and for the first time today, I am going to be hosting today's episode. I have the most popular and backed by indeed popular demand, Stan Heller, who's going to be joining me later on today for a keynote presentation. And we have got a lot of various different insights and a trip around the world, virtually a trip around the global stock markets in store. Stan is also going to tell you a lot more about our recent new development about a launch of a new retirement course. So I'm not going to delve into that myself, but I will let you know that Stan is going to be talking a lot more about that later on today. We are going to be punctual, as we always are here at VectorVest. And so this session today, now that you're joining us live here at 4 p.m. Irish time, 11 a.m. Eastern time, and from wherever you are right around the world, you are super welcome, and you're going to be settling in now for the next 90 minutes between Stan and I. So before we get started, what I am going to ask is for you all to tell us there on YouTube where you are joining us from. So I am going to stop sharing my screen there now for a moment, and what I'm going to do is I'm going to pop on over there to YouTube and to see exactly where everybody is joining us from. So please do pop into the chat there where you are joining us from, because it's always really, really intriguing to see exactly where you are coming from. Okay, so we're starting to see here. Now, sorry, I'm just going to go back there and sharing my screen again. Because at the moment I have just thrown everything off there for joy, and no, that's perfect. Okay, so I can see here we have got Alan who's joining us from Australia. I can see also here, good morning from Vulcan AB. Glad to hear you again, Stan. Yes, as I say, he's going to be back indeed. We have people here from Cape Town. We have people here from Ottawa in Canada. We have people from South Africa. We have people from LBC, Houston, Edmonton, Komoko, Ontario, from Belgium, wow, New York, Colombia, Netherlands, Belgium, all over, literally from all over the world here, which is really, really super to see. Okay, so what I'm going to do, I'm just going to give a shout out there to Joey again. What I'm going to do, Joey, is I'm just going to go back there to my slides. If you could put me back on, that would be great. Thank you. And what I'm going to do now is I'm going to walk you through specifically what we have in store for you today. Okay, so first of all, I am, of course, obliged to walk you through our disclaimer, because, of course, while we are here to share our insights, our experience, etc., we are neither the employees or subscribers are licensed to offer specific investment advice. And you can see the full disclaimer there. Everything that you will see and hear today is provided for educational purposes only and should never be taken as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. Okay, so this is our agenda. First of all, as I say, it is my first time to be hosting the International Forum today, which I've been looking forward to for a long time now. And I'm going to take you through a global market review, and I'm going to take you through various different elements of what's going on in our different databases around the world. I'm going to talk to you particularly about the bond yield in the US, some developments that have happened in the US market this week, and how we can use this information, put it into VectorVest to help us to navigate the maybe more frothy valuations that we see happening in the market at the moment, and how to find corners of the market that can offer particularly good value. I'm also going to talk about two stocks that, of course, are in the VectorVest database. They are Salesforce and HP, Hewlett-Packard. The reason I want to pick up on those is because both of them had earnings this week, but both of them had very different reactions to the other. So I'd like to go through that, and particularly to highlight how you can look at stocks from a proprietary VectorVest way, which only subscribers at VectorVest can do with their software, and that could help you understand why the reactions were so different to what happened this week. In addition as well, I'm going to show you how I'm picking out the earnings calls that I'm watching next week, and also I'm going to pick up on something. Now, this development happened a little while ago, but it's so relevant every single week that I see developments happening in the stock markets. Two statements in the Interactive Brokers earnings call that just piqued my interest. And I want to show those to you today because I haven't been here in the past couple of months here on this international forum. I've been at VectorVest certainly, but it is just something that caught my eye that I would like to talk you through. Further, if we have time, I also want to delve very, very briefly into how I am looking at navigating the stock market myself at the moment in terms of picking out stocks, but how I can also add in a layer of options into that. And then finally, I just want to finish up in Australia, because of the demand for copper is growing and growing and growing and growing, particularly with the proliferation of electrical vehicles or EVs around the world. And if you are interested in looking at that trend specifically from a stock specific point of view, as opposed to ETFs, because ETFs have become so much more expensive now due to storage costs, etc. I would just want to show you how to look at that from an Australian perspective. And then, of course, I'm going to be handing you over to Stan, who is going to delve into his presentation. And because he is from Canada, I certainly didn't feel the need, therefore, to be able to delve into that market. He'll do a much better job of that. So that is what we have in store for you. So let's make a start. What I'm going to do first of all is take a trip around the world, looking at the markets from a VectorVest point of view. Okay, so when you take a look here at what is going on from an overall macro stock market point of view, for anybody who isn't familiar, the VectorVest composite is our own index, right? So I am going to talk today about the S&P 500, and it gained a lot of headlines during the week, as it does every week, because it had its first weekly decline in May. And also, of course, because so much of the returns, like 87% of the returns in the S&P 500 year to date, have come from 10 stocks. There's been a lot of talk every single week about the S&P. However, of course, it is the largest 500 companies in the States, and the composition has changed a little bit now due to the Magnificent Seven, and because of and those include Amazon and Nvidia and Apple and all of the companies that you've become, I'm sure, very familiar with. But when you want to look at the US stock market as a whole, of course, it's not just driven by 7 companies. It's not just driven by 500 companies. Instead, what VectorVest Composite does is it looks at all the stocks in the US. And that idea is replicated across all 4 of our databases. So you can see here, in total contrast to the S&P 500, is that the VectorVest composite in the US over here is up 5.59%. Over here, you can see that. And in Canada, it's up more. Now I'm just going to change my slide there, as I'm seeing there's a little bit of, I'm just going to check in there with Joy. Is that appearing okay there on your screen, Joy? There's just something flashing on mine, so we're all okay. Okay. Yep. So, so you can see here that in Canada, our year-to-date performance is 6.77%. And also you can see a difference in how the market is feeling at the moment. That's how I describe the market timing gauge anyway. If you just look underneath down here, you can look here at the color guards in both cases. So in the case of Canada, the color guard is mildly bearish, and you can see there a red light was delivered yesterday, the buy-sell ratio being at 0.51, but it's also down day over day and week over week. Now, for anybody who isn't familiar with what the buy-sell ratio is, the buy-sell ratio is the number of buy recommendations in the VectorVest VectorVest composite in comparison to the number of sell recommendations. And that 0.51 number tells us that for every 2 sell recommendations in VectorVest Canada at the moment, there are 1 buy recommendation. So that is what is particularly driving that. There's a lot of yellow as well there that you can see on the screen. And yellow is, again, if I was to describe this in a more feeling sense, yellow is when the trend in the market is either weakening or reversing. And you can see that earlier on, like a week ago, the trend was very green. You can see there are a lot of green lights at the bottom left-hand corner in terms of the price of the VectorVest composite. So that trend, is it weakening or is it reversing? At the moment, the color guard tells us at the moment that it is mildly bearish. So it looks like it's reversing, but time will tell. Now, depending on who you are, these colors and numbers matter differently. So me personally, I'm more of a confirm calls type of woman. I'm more a longer term investor. I don't trade the market necessarily. The only type of trading behavior you might suggest if you were to look at my stock market statement would be what I do with options. But ordinarily, a lot of my stocks I hold for longer periods of time than would be suggestive of a trader's activity. So therefore, I would be looking at the confirm call, which, as you can see here, was issued on the 14th of November in Canada. and the 14th of April in the US. On the other hand, if I was somebody who was trading on a more daily basis, then I would be looking at the green light buyer. And as you can see, the dates there are much more recent. The 27th of May, as you can see there, and the 27th of May happened this week. The green light buyer shifted to a yellow light. And as you can see there, in the case of the green light buyer, in the US, that was the 21st of May. And as you can see, it's now in a situation of a yellow light. Primary wave in Canada is down and the primary wave in the US is up. Now, therefore, depending, as I say, who you are, if you're more like me, you're going to be looking more towards the confirmed calls. If you're going to be more short term, you've got the green light buyer. And in between, then we have the primary wave and the DEW. Now, if we move down under, you can see there in Canada, the colour guard is neutral. So it's coming off some significantly red lights across the board. You can see there it had some red lights there on the 28th, 29th and 30th. In other words, Tuesday, Wednesday and Thursday in Canada, or sorry, in Australia. And those lights actually triggered a confirmed down call. And that is of the 4 databases, there is currently only one in a confirmed down, and that is in Australia. So that happened on Thursday. It's in a confirmed down call. And also, if you just take a look over there, you can see the MTI is below 1, and that happened later last week. The reason that I say the primary wave is in between the confirmed call and the primary, the green light buyer, is because look there at when the primary wave turned negative. It predicted, no, that's not the term I should use. It presaged instead, I would say, the confirmed call down. So the primary wave is more, it takes into consideration what's been happening over the past 5 days, whereas the confirmed down call and the confirmed up call, of course, they take into consideration something that is far more longer term. The reason that I'm not getting into what each of these mean is that I would take up all of the time this morning with you in talking through each of those. And there is a plethora of webinars and step-by-step guides in our VectorVest software that can help you to delve more deeply into that. But in essence here in Australia, what we can see is that the stock market is at the moment in a confirmed down call for a longer term investor. But certainly things did turn to a little bit more of the upside on Friday for a more short-term investor. And then, of course, if we come to my own backyard, when we look at VectorVest Europe, so far this year, the VectorVest composite is up 5.86% in Europe. My market is different. It's different to Stan's, it's different to Joey's and the team that you meet in the US. It's different to the team in Australia because my market is comprised from a Eurozone perspective of multiple markets. So as you can imagine, I'm based in Ireland. I invest in Irish stocks, have done for many years. I also invest in Belgian stocks. I invest in Dutch stocks. And when I would be looking at what is driving those stock performances, one thing that I share in common with every one of the other markets is that we all operate on the same driver of an interest rate. So the ECB, the European Central Bank, highly predicted at this stage to be cutting interest rates next week. That is going to have the same impact on an Irish investor, as a Dutch investor, as a German investor, as a French investor. But there's so much fiscal policy, so much other, like the Irish economic growth story is so different to that in Germany. The German saver, for example, is 5 times more likely to be saving money in Germany than in the US. And the Irish savings ratio is going to be very different to that of the Maltese ratio. And if you look at unemployment levels in Spain in comparison to unemployment levels in France, in comparison to unemployment levels in Greece, all of those are very different. So when you look at the VectorVest composite in the EU, this is driven from a range of different geographies and fiscal policies and economies, etc. However, it is of great benefit to be able to look at the Eurozone market from a macro point of view. And I will say that VectorVest, I've been with VectorVest now since 2011. It has certainly encouraged me to be a more broad-minded investor at looking at different geographies. And I think, and I should really go back and check my records on this, but I think the most money that I ever made on a stock was actually in over a proportion of the period of time I had invested in it was actually a Dutch stock that I had sold an option on back in, I think it was October 2021, and I sold it in February 22. It was, if I'm right now, if I have my dates right. And I remember then picking that stock, and if I hadn't come across VectorVest, there's no way I would have looked into that stock market. And of course, being a traditional Irish investor, I've been investing in the US for forever, since the beginning. So therefore, I will say that is one of the things that differentiates being a European investor and a European VectorVest subscriber. I'd just be interested to hear on you, actually, if you can just tell us there in the chat, has VectorVest influenced your decision making? That apart from picking the stocks and doing the things, using VectorVest to do what you would traditionally do, has it actually encouraged you to do anything different? Maybe invest in a different market like I've done, or maybe look at a portion of stock market analysis that you wouldn't do generally. Like I would be more a fundamental, but I'm also a technical investor for sure. Like there's a lot more technical analysis tools in VectorVest that when I started becoming part of the VectorVest community, I use the technical analysis indicators more than I would have maybe beforehand. So is there anything else that VectorVest has pushed you to consider? Maybe by engaging in an options course, you've discovered options, or maybe it is looking at ETFs in a different way. I'd just be interested to see. I'm just gonna bring up the chat over here because I don't have it right in front of me. Let me just pull up the chat. I'm looking for my mouse and I found it. Okay. So when it comes to you, what has, okay. Oh, absolutely. Okay. Gary says he has his fast ears on to listen to me. It's a good thing then that this is being streamed and thus recorded at the same time, so you can slow me down anytime you want to go back over this. So Stuart says develop your own trading systems. Yeah, I mean, certainly in my case as well, I have used Unisearch in many different ways to enable me to build my own custom systems, two of which I'm going to show you today. Charles says usually stick with the US market. Interesting. Sonny says Canadian, never invested in the US before VectorVest, now over half in the US. Yeah, that's interesting. James says expanded my world view overall. Interesting. Herwin says VectorVest has made me more of a trend follower rather than just buying and holding. I would certainly say Dr. D's influence would be that. I have certainly in my conversations with Dr. D over the years before he sadly passed away, he would certainly be of that case. And what I mean by conversations with him, I mean actual conversations that I would have had in person with him. But the Green Book, stocks, stock strategies and common sense investing, he writes that in such a way that you feel you're talking to him. So that's what I also mean in conversations with him. I'd agree with you there. Norman says VectorVest helps me not to lose money. Well, that is that is certainly a great addition to that to that too. So great, glad to hear that. It's just an interesting thing that I wanted to check in with you here. Okay, so what I'm going to do now is let me just go to the bond market for a moment. Okay, I'm just going to go over here to the bond market. I'm going to start with the US. Now, the US bond market is really interesting, of course, because the US economy, and specifically when I say about the US economy, I mean even more specifically the US Fed. The US Fed, of course, has interest rates at a 22-year high. I think this week is going to mark the divergence between monetary policy in Europe, as I mentioned with the ECB, versus in the US, where we don't anticipate a rate cut anytime soon in the US. If I was here at the beginning of the year, markets were pricing in 5 to 6 rate cuts. That is down now to possibly one, possibly none. But next week, unless something really shocking happens, we are expecting the ECB to cut rates. Now, what does that mean? Well, it means that if I lend to the US government at the moment, investors want to be compensated accordingly. And also because in this week, the US economy is running at a very significant deficit at 8.8% of GDP. And that's double last year's. And of course, if we look at what both presidential candidates are putting forward, neither of them are talking about cutting the deficit. So the government is going to have to borrow a lot of money in the next couple of years, one way or the other. And if it's going to borrow money, it needs lenders. It needs to find people who are willing to lend to it. And of course, those lenders are going to want a significant interest rate, bearing in mind that when they can put their money on very, 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 very minimal risk deposits, they can get 22-year highs. So at the moment, if I was to lend to the US government, it is willing to offer me 4.5%. That's what I can see here, 4.5% for the next 10 years. That means that if I was to lend $100 today, I would get 4.5% every year between now and the end of the period, at which time I would get my $100 back. Now, anybody who would be willing to do that, of course, will know that the purchasing power of $100 is going to change quite significantly. But this has a really, really big impact on us stock market investors, because we need to know that if we're going to lend money to the US government, and I can pull up Germany for you here. Germany at the moment, the 10-year is offering 2.658%, much lower. So if I know I can get 4.5% every year from the US government for the next 10 years, how do I know, or how can I invest to make sure that I can get more than that in the stock market? And that was the whole premise of my VectorVest essay this week. In my views this week, that is precisely what I spoke about. And any of you can get those. I'm just going to pull up the program here now, because I want to be able to answer this question. Let me pull up my Europe, VectorVest Europe here. Okay. So in my views this week, okay, this is what I write about. I write about earnings yield and the story it tells. And what I did there is that I looked at what is the earnings yield at the moment of the S&P 500? How does that compare to US government bonds? And then from there, I went on to explain something that I'd like to share with you now. And that is, if I was to take any stock today and compare its earnings yield to the bond yield, what would I find? So I'm going to start off with the company that everyone was talking about this week, and it seems to be every week, is, of course, NVIDIA. And why am I going to specifically talk about NVIDIA is because when I go here to the viewer and I go to viewer's home, which is the natural place for me to start looking at specific stocks, what is the top VST stock? It is NVIDIA. For anybody who is unfamiliar with what I mean by the top VST stock, VST stands for value, safety, and timing. It is the way in which we analyze stocks here at VectorVest, among many other ways. But it combines fundamentals and technical indicators. And it is if you were to take a trial or subscribe to VectorVest and you go straight into analyzing stocks, like I'm just about to do here, VST is the default way that you will be looking at the entire stock market in any geography. Okay, so here we have NVIDIA. And what I did here is that I scrolled over to the right. Okay, I scrolled over here to the right. And here I found my where's my EY? EY. Okay, I'm going to keep on scrolling. DY. And interestingly, I can't quite see it. Okay, so we have relative safety, exchange price, EST. Okay, so what I'm going to do here, let me just change my layout. I have it somewhere else. Let me just change my layout here. Okay, I'm going to change my layout. And what I'm just going to make sure is that EY is, yeah, there we go. I'm just going to pop it across and press OK. And now we'll see my earnings yield is up. There we are. Okay, there's my earnings yield, right? So you can see here the earnings yield of NVIDIA is 2.25%. That's a lot lower than the US government bond yield. And of course, many of you might be saying, are you seriously suggesting that NVIDIA is expected to underperform the US government bond over the next 10 years? I'm not going to predict anything. But what I am saying is based on current share price at the moment, of course, NVIDIA has had a meteoric rise over the past while, is that right now the earnings that is being generated per dollar of share price is 2.25%. And of course, that does present a valuation risk, because how much further can NVIDIA go? Now, people have been asking that for years at this point. But the point here that I'm making is that it does present a way in which that we can analyze our stocks. This is how we can analyze the risk and, of course, the expected return that we can anticipate from investing in stocks, of course, that are driven by profits. In this case, the earnings yield of NVIDIA is 2.25, whereas the next stock here, the earnings yield is 17.37%. As you can see, the next one, Banco Macro, is 9.31%, etc. However, what I would like to do is I would like to not just look at one stock and to compare it against the bond yield, but instead look at the entire so maybe not entire list, but to take a list of stocks and then compare it. And again, this is what I did in my VectorVest views this week. So what I'm going to do now here is, here is one that I created earlier, is I went over here and I created a watch list, right? So I went here into my watch list, and specifically, let me just go up here now. What I did is I need to put all of these back into a folder. Right, so what I did was I created a new watch list in a group. And in that group, then what I did was into my watch lists, in there, I created earnings yield check. Okay, so that's what I did. I created a new watch list here called earnings yield check. Now, what I'm going to do is I'm just going to delete all of my stocks out of here so that you can see exactly how I'm going to do this. So I'm just going to delete all of them. Okay, delete all. Yeah, very good. Right, they're all gone now. So when I go back here to my viewer home, and I'm going to highlight all of these stocks, I'm going to right click, and then I'm going to add to portfolio. No, sorry, not add to portfolio, add to watch list, add to watch list, and then I'm going to pick the watch list over here that I'd like to put them into my watch list, down here, earnings yield check. Okay. And now they all go in here. And what I now do is, this is why I was using the word entire, is now down here at the bottom, I can see the average earnings yield of all of these stocks. So as you can see here, the earnings yield at the moment is 3.43%. Now, the beautiful thing about investing in the stock market, of course, is that when you buy a stock, you're not just buying a piece of its earnings that you will hope drives up the share price. You're also buying the dividend yield as well. You're also buying the stocks where they are going to give a portion of that earnings right back to you. And so as a result of being able to compare the earnings yield and the dividend yield combined and then add the two together, this is, of course, what you are anticipating on a broad measure that you will be getting from the stock market. And then comparing that to the bond yield in the appropriate market of wherever you are, what it does is that it enables you then to determine your risk profile compared to the asset classes that are out there. And this is the point I make, is a lot of people are talking about earnings yield and valuation and frothy markets at the moment. This is how you use the VectorVest system to really and truly understand how to navigate this. I will also say that when it comes to looking at the earnings yield in the stock market, it's very hard to find a consistent measure. And the reason for that is that some people look at forward earnings and some people look at backwards earnings, etc. If you're wondering how VectorVest does it, I'm going to go up here to NVIDIA or any stock, right click, and I get a full stock analysis report. And then I'm going to scroll down from here, and here we go. You can see that VectorVest looks at earnings, looking at leading 12 months. So what happens for the next 12 months on the basis of earnings per share, and then earnings yield reflects earnings per share as a percentage of price. So if you ever go and look for earnings yield of, let's say, the S&P 500, or you look at the broad stock market or of a specific stock, I just want to highlight this is exactly how VectorVest does it. So the transparency is there from the very beginning. And if you're ever wondering about why is one number not the same as another number you find, that's the way in which you can get through to your answer. Okay, so that was the first thing I wanted to talk about in a stock specific way today, is how to look at the earnings yield of a market, compare it to the bond yield, and how also to look at the earnings yield of a selection of stocks as distinct to just one. Now, next up today is I would like to talk to you about HP and Salesforce. Okay, so both stocks had their earnings out this week. So I'm just going to pull up. Now, HP was actually a stock that I analysed for you the last time I was on the VectorVest International Forum. I went through the earnings call in here. And so HPQ was one. And then I also want to show you CRM. Okay, now, here's two stocks, right? Obviously, you're probably familiar with both of them. I'm a customer of HP. I have one of their printers here about a foot away from me. And Salesforce is a company that I'm sure many of you have gotten familiar with. If you're in any business at all and there's any sort of CRM, customer relationship management system that you need, a natural competitor or either a supplier to you, could be Salesforce, or a competitor to whoever you're working with would also be Salesforce. It has been a growth stock for a very, very, very long time. And it is a company that is immensely scalable. It factors a lot of AI into what it does now, etc. So I'm, again, not going to get into the business models of both of them. What I do want to talk to you about is the reaction this week of the market to their earnings. Now, before you look at, one is a sell and one is a buy, before you get into any of that, can I draw your attention, please, to the RS? Okay, look over here to the relative safety. So Salesforce's relative safety is 1.47. It is a machine when it comes to consistency and predictability of earnings. Absolute machine. When you look at HP, it's, you know, broadly average, okay, slightly under favorable, but broadly average. Now, when you think about HP, just think about this for a moment. I only buy a printer when I need to, right? I don't go out and I don't have a monthly subscription to printers. And HP Instant Ink was a product that they developed where instead of me going to the, you know, going to buy a printer, buy printer ink when it ran out, is that I could get on a subscription basis to specifically buy the printer ink instead, right? And it talks about the growth of that particular product, but the repeatability of HP would be less so than Salesforce. So that is it from a safety point of view, but look at its valuation. Look over here, look at the valuation, right? So at the moment, the price of Salesforce is $234. VectorVest believes that the value could go up as far as $279. The price of HP is $36.50. The valuation here could go up to $43.37. But when you look at the PE ratio, this factors in just how much stock market investors are anticipating two very, very, very different performances from these stocks. Salesforce's PE ratio is currently 25, HP's is at 10. In other words, the stock market doesn't anticipate anything close to the performance of HP than it does in comparison to Salesforce. And that's precisely what happened. Let me show you, and I'm just going to highlight both of these stocks here, and let me graph both of them and look at what happened this week. So this is the top one here that you see is Salesforce, right? Salesforce had a massive decline from $271 a share, which, by the way, was what the current valuation level is. It dropped down to $234 a share as a result of the earnings that came out. The earnings result that came out, growth did happen, but it was much less than what people had anticipated. And I saw a very interesting piece this week in the Financial Times, and what it is that it compares them as being a tortoise and a share. Look at this. HP. Oh, okay. No, I'm not. This is what I'm talking about. Let me just. I'm not sure what's going on there. Okay. HP returned more than 16%. Salesforce had a shade under 13%. I mentioned the vast difference in growth and the divergence in returns to illustrate a simple point. Even in an era when growth stocks as a group have done much better than value stocks as a group, the price you pay for a stock still matters a lot. HP has long since traded on a single-digit multiple of earnings. That's the PE ratio. No one ever thought laptops and expensive ink were the products of the future. Salesforce is one of the great software disruptors, and HP has been the better stock. HP now trades at 11 times this year's estimated earnings, expensive relative to its history. Salesforce at 21 times is as cheap as it's ever been. And it's just interesting just to point out this other one where it said the hair, being Salesforce, fell 20% after the company targeted growth at a mere 8%. And that's a rate that HP can only dream of in the current quarter. So the reason that I'm bringing this up to you is look at the reaction. The same earnings growth came out. The same earnings performance came out, but look at the difference in what happened to the share price. Again, now I think that is just my screen getting a little bit confused by all of the things that I'm trying to do to it. So I'm just going to just close down there one thing so that, yeah, now, okay. So what you can see here, and I'm just going to pull up the earnings growth rate here as well. Sorry, I need to put on the share price as well. Yeah, so in the case here of HP, as you can see, the earnings growth has been much, much, much slower and deliberate, although it has been continuing to rise. Whereas then on the other hand, and had a massive growth, massive share price growth this week based on the reaction. On the other hand, as you can see, Salesforce has had a much faster growth, but because we can see here that the earnings growth it's not growing to the same extent as what has been happening in the past, then you see a really big, really significant fall in the share price to the point of where now the stock actually would have delivered practically nothing to investors if you had held it over a full year. And of course, now what you can see is that VectorVest has one stock as a sell. The reason that it is deemed to be a sell is because its price of $234.44 has now fallen underneath the stop price. In contrast, on the other hand, HP is now a buy for, because its VST is above 1, its share price is above its stop price. The RT is above 1, and also the price is diverging away from the stop. So two very different stocks telling two very different stories. And this is an example of how the PE ratio in particular highlights how investors often underprice a stock that's growing to a lesser extent, but it certainly can be very, very revealing along the way. Now, I'm going to move on to something that caught my eye. And I'm going to be handing over to Stan in about 5 minutes, but something that caught my eye in the Interactive Brokers earnings statements. Let me bring this up for you. Now, this didn't happen today or indeed yesterday, but I do just want to bring this up to you, right? So what I'm doing here is I'm bringing up the Interactive Brokers. Interactive Brokers is a stock, just so many of you, I'm sure you're aware of it. It's a stock broker, and I found it. Not the stockbroker itself, but I found it as a share being very high in VST quite some time ago. I can't exactly pinpoint the day or the hour now for you. But anyway, I bought it as a result of its VST level in VectorVest, and it has been one of my best performing stocks this year. And incrementally so it hasn't been all that volatile anytime I've been looking at it, which, I don't check my stocks every day, but I would be pretty periodic, and when I do, and broadly speaking, Interactive Brokers has been doing well for me for quite a period of time. So I've been tuning into the earnings reports, and this is one of the things that I wanted to highlight to you in the transcript. Okay, so let me just want to search here for 2019. Okay, let me just say combined. Let me get this. Okay, now let me just go right back up then, new accounts then. I'm just going to check there. Yeah, new accounts. I had this ready to go for you. Yes, this is it. This is it here. Look, in this case, right? So this is the earnings report for the first quarter of 2024. And here, this is what it says. So I was searching for 2019, didn't pick it up. We added in this one quarter twice the number of accounts we added in all of 2019. Isn't that striking? In 2019, X number of accounts were created. Double that and more for the whole year was created in the first quarter of this year. And I think that that's really striking because it just shows the sheer volume of investors that are joining the market. Now, of course, these investors could already have other accounts, and I get all that. But even if you just take into consideration the growth of the number of people taking accounts in this business, I think it just shows you how many more parties are at play here. And if I go back to when I met VectorVest first, the very, very beginning, I remember that back then there was only, let's say, an end of day product. Now we've got a real-time product. We've got a real-time product in Canada, and that's been there for a long time. Back then, the costs of buying and selling online were much higher than they are now. Back then, mobile devices didn't have the ability to buy and sell. You had to log into your account and all that sort of thing, which itself was quite innovative at the time. So let's be considerate of the changes that have happened to the stock market in terms of accessibility, liquidity, cost, access to information, timing of information, which just shows how much quicker things can happen. Never mind if we get into societal norms like the speed of WhatsApp groups and all of those things that happen along the way as well. Even the fact that we're streaming this live here into every corner of the world at a time when it's not, you didn't need to register for a webinar and all that sort of thing. But I just think that when you take a look at this, it just shows the speed at which people are joining the stock market. The second thing as well, is another statistic I came across this week, is that in 1980, the stock market in the US was the same size as GDP. Today, it's 4 times that. So actually, the stock market has grown to 4 times GDP. And a lot of that, of course, has been enabled through a lot of government assistance, and money has been coming into the market in different ways, whether it is through quantitative easing or LTROs in Europe and so on like that. I just think that those numbers, when I show you the earnings yield and the bond yield, the underpinning elements of the stock market are really, really striking. However, another thing stood out to me in this particular transcript. Now, it's referred to in the prepared remarks, but what I thought was much more interesting is when I went into the Q&A. So let me go over here to the Q&A, and this comes from the management team, the executive team in Interactive Brokers itself. Again, I want to get the word hope. Yeah, I want to get it, hope. Let me go to the next one. Yep, and the next one. Yes, here in this case, right, they're talking about the amount of money that is out on margin in Interactive Brokers, and it is at the highest level that it's ever been, right? So and I just think, so this is the amount of money that Interactive Brokers is making on interest from lending out money on margin to people who are buying stocks, specifically in a leveraged position. And this is what Thomas Peterfy says. Let me put it this way. I hope they're not going much higher because I'm a nervous Nelly. When margin loans shoot up, that always is followed by a quick collapse in the market. That's my almost 50-year experience. So I think it's interesting then to look at that point and just keep an eye on where the margin loans are currently. Margin loans. Okay, and he says here it exceeded, this is the margin loans exceeded 50 billion for the first time since 2021, and our margin interest income. So that's a number I'm going to be watching for the next earnings call that is going to be taking place at Interactive Brokers. Like I said, I'm going to be handing over to Stan in 1 minute, and when I do that, what I just want to do is show you the earnings calls that I'm going to be watching out for next week. What I did first of all is over here in Uni Search, I created my earnings call with fundamental search. This helps me identify the stocks that might be of interest to me from the perspective of potentially buying them because they might be suitable for me from a fundamental point of view. And also if the earnings call is coming up in the next while, and of course, if all of the fundamentals are pointing bullishly, that can give me an even greater incentive to buy. And then I apply a layer of options on top of that. So what I did here is that you can see here, my search I put together is stock earnings date is less than 10 days out, but more than 5 days. The VST is greater than 1. I always like for my relative safety to be greater than 1.2. My relative timing is greater than 1. I always want to see that. Of course, I want to see more buyers than sellers, and also that the recommendation is a buy. Now, I have got high standards in most ways. I've got high standards here for this search, and as you can see, I ran it today and there isn't any. That's not to say that I won't be looking at earnings calls next week, but how I now will be looking for them is pop back over to viewer, down here to events viewer, and then when I get into events viewer, what it's going to show me is all of the earnings reports that are, or the earnings calls that are happening in the next week. So you can see here on Monday, there's a series of them. Another stock that I've analysed for you after listening to the earnings call a while ago is coming up this week, which is not that day, but the next day is Lululemon. So Lululemon is out, for example, on Wednesday. Doesn't appear on my search, in my fundamental search, but in my earnings viewer search, it certainly does. So I am now going to hand you over to the man himself. I'm going to hand you over to Stan, who's going to take us on a keynote presentation now that he has prepared. I know Stan is very, very popular with this audience, so I'm really excited to hear not just what he's going to say, but what you're going to say in the chat as well, because I'm going to be interacting with you while I'm there. And the floor, Stan Heller, is now yours.
Hey, that's pretty awesome. Susan, thank you so much. Let me make sure I've got the right screen showing. I don't know if I did it or not. Joy, did I do it all right? No, I did not. Oh, I got it. Okay. Oh, there it comes. Okay. Well, great to be with you. And what a wonderful presentation from Susan. So many valuable nuggets of information and techniques and a search using the earnings criteria. I thought that was just fantastic. And your analysis was fantastic. And Sunny, I believe, chatted in that your enthusiasm shines through, and it certainly did. So thank you for that, Susan. So before I get started, I'm going to be talking about the NPI and how we can integrate that with Dr. Barbara Starr's favorite charting method. Just give me a 1 in the chat box if you're familiar with the NPI and you're using it. Type in a 2 if you aren't aware of the NPI, and a 3 if you just need more information on the NPI, the near perfect indicator. So we're looking for 1s if you're already using it, and I'm seeing a lot of 1s coming in, and so many familiar names I see in the chat, and it's wonderful to see you all here again. Wow, so many 1s. There's a few 3s. So this will be of interest to you, but I am going to spend just a very little bit of time talking about the NPI, and then I want to go right into the chart setup from our friend Dr. Barbara Starr. So ever since the NPI, or the near perfect indicator, was introduced in January 2018, we've learned how easy it is to use on its own or with your favorite indicators for confirmation or whatever. It might be a moving average or a price, or another technical indicator. We've taught traders how to use the NPI with the EMA squeeze and the Guppy chart setups. So it's all very helpful to make good entry and exit decisions. Today, you're going to learn a very simple and effective technical analysis method, first introduced to the International Forum audience by our dear friend, Dr. Barbara Starr, back in 2016. And it was a pleasure speaking with her again last week about the presentation that I'm doing today. So I want to show you how well it works with the near perfect indicator trading setup. And it's not an automated trading system. I want to tell you about that. But Dr. Toledo always said, always study a chart before you buy. And even in an automated trading system, which I have as well, I still look at the chart before I actually go to the broker and make that decision. And I hope many of you do that as well. And those of you that are into technical analysis, I think you're going to love this technique on its own or with the NPI. So let's get started. We've got a lot of ground to cover. And do chat in your questions and comments. I love that. We should have a lot more likes in the chat after Susan's presentation. So if you have a minute and you loved her presentation, as I know many of you did and I did, just give us a like on that. So what is a near perfect indicator? You think of it as the ebb and flow of the ocean tides. A stock's price cycle waves have repeatable rhythmic patterns of contraction and expansion. And the NPI tracks these waves using the moving averages of two powerful VectorVest indicators. And these are exclusive indicators, the relative timing and the stop price. So that's the essence of the NPI. And we look at the 40 moving average of relative timing, or the RT, and it tracks the price movement like this. So we see the trough down here, or maybe I can point it out here. Hope my mouse is big enough to show up there. So we see the trough, and then we see the upward thrust of momentum coming out of that compression or trough area. And we move up, and then as we get a little higher toward the peak, we can start to take profits or protect ourselves a little bit. Maybe raise some cash and get ready for the next stock idea. Now, this wasn't just a random image. I asked our graphics team to create this, but as the template, we used Apple. And you can see how it works so incredibly well to follow the waves of the stock price using that 40 moving average of RT. So let's look at some chart examples, and I'll just show you how to select the near perfect indicator on its own, and then we'll show more about Dr. Starr's technique. So I'm just going to go into the US software. So I've got to bring it into this screen. And I'm just going to go to the Viewers tab. I'm waiting for the YouTube to catch up, but maybe your refresh is faster than mine. But anyway, so there's the Viewers tab and the Stock Viewer, and love the explanation from Susan about the earnings yield, EPS, the dividend yield. All of that was just excellent. From here, you can just come up and click on Graph All. So these are already stocks that have been performing quite well. NVIDIA, I'm going to go into that a little bit more with Dr. Starr's technique. It's a stock that I've owned now at least a couple of times, and we'll show you how that works. But this is the regular graph layout. So you come up to the Graph Layouts tab up here in the graph panel at the right, and now you can click on the Near Perfect Indicator, NPI Near Perfect Indicator. And notice, folks, we now have the description of the current layout that we're using just below Select Layout to Load. So that's something new in the last week or so. So here's the Near Perfect Indicator. And I just love this picture. I look at this picture and I think, boy, if you're following the Near Perfect Indicator, it's not going to be perfect every time. That's not in the name. But when you get a stock where there's a thrust of that 5 moving average of RT in the subgraph, and it's crossing above the 40 moving average of RT, you've given yourself some terrific odds of having a winner. And similarly, the 5 moving average of the stop price, which is in blue, and the 40 moving average of the stop, for the long-term investor, it's giving you some great information, visual way of tracking that stock. Here's a fairly newer one to the database, and it caught it very well. Here's Banco Macro, and you can see caught it very well. Now here with the 5 moving average of RT, you're getting a lot of ins and outs, and that might be fine for the traders, but for the longer term investors, you're watching that slope of the 5 and 40 moving averages of stop, the STOP price, and it's moving up very, very nicely. CRS moving up beautifully there. DEC, recent rally. So on we go, and First Solar, big bounce from earnings. So here's one. What this technique also allows you to do is maybe avoid buying up at the top, even though we got a signal from the NPI crossover in the bottom. You might want to just take profits early or not purchase the stock up at the top. So that's the NPI layout on its own. Are there any questions about that? I'll just do a quick look over at the the chat in the YouTube. Not seeing any, so I think we're all good. Yeah, Raphael says it's great to hear that VectorVest gives you peace of mind, and that is certainly true. All right, so I'm going to close out of that, and I'll go back to the slides. So that's how you select the near perfect indicator layout. Every subscriber has access to it in the graph panel. You don't need ProTrader or any add-ons. It's just there for you. So now I want to talk about the NPI and Dr. Barbara Starr's favorite charting method, which she shared with us about 8 years ago already in this same international online forum. So we're going to talk about that and the synergistic power of the NPI. And I'm going to add a little volume technique that may be new to you, but it's very important. And then I'm going to go into the charting techniques of Dr. Starr, who is a technical analyst and contributing writer to Stocks and Commodities magazine. And of course, she's been a longtime supporter of VectorVest and the VectorVest community. So the trend locator is what we're looking for. It uses a 3-period simple moving average as a surrogate for price. So already we're talking about simple. It reduces the daily fluctuations and the market noise. Just like any moving average, it's a smoothing technique, and it takes away some of that noise and volatility that you see on the price action. It delivers visual information about the short-term price direction, displays breakouts, pullbacks, sideways movement. Going to show you how we do that. And identifies expansion, contraction, and compression zones. You want to be a buyer when the price is expanding and there's resistance is not right overhead. When there's contraction or compression, you just want to wait, and that's what we're seeing. So here's what the trend indicator looks like on a chart, and it's just a 3 simple moving average. But you can see at the bottom left, starting there, we have the compression as we start out in June and July 2023, and then we get a thrust to the upside, a higher high and a higher low, and then we get into more compression. So if you're still looking for an entry opportunity, it's coming right here, and we can come in and get in on that. And as we go up the graph, we see that we're hitting higher highs and higher lows, but the visual trend of this 3 moving average is so very clear. So what we're going to do now is just draw lines. We're going to use the horizontal line drawing tool in the VectorVest toolbar, and we'll just draw our lines, and I'll show you how to do that I think, after the next slide when I first show you what it looks like. And for some of you, it's going to look a little busy, but is this ever worth it? And we're just connecting these lines at the tops and any pullbacks, any higher lows, lower lows. We're just connecting these lines with the horizontal lines. And all of a sudden, we can see very clearly the expansion zone here. And you'll love how this connects with the NPI and the 5 and 40 moving average of RT. We have the compression or contraction area where we either want to hold our position or not buy anything new. And then another expansion zone. And as we trail this up, we can see very clearly all the support areas when we get this pullback. And we know, for example, here, a little bit middle right of the graph, we can see that if support doesn't hold here, we're going to come all the way down to the next support level. And we may not want to accept that. That's another $2 move on a $12 stock. So we may not want to accept that. But we see it all the way along the expansion zones where we're a buyer, compression, where we're not buying, but we may be holding a position, and then another expansion zone, compression, and expansion. So that's what we're seeing with this technique. When we put the price on, we can see how price adds confusion to our graph. We see the overall trend, but there are times when the 3 moving average lines clearly identify the breakouts and expansion after the compression, and it's more clear when you have the 3 moving average and these horizontal lines that you've drawn at the tips and the bottoms all the way along. So here you see a situation where price fell outside the 3 moving average line. The red bar looks like an inverted hammer here, followed by a lower open. You can see that the green bar opened lower than the previous close. That might suggest that it's time to sell or go short. But the 3 moving average support line lets you know that that would be a mistake. You can hang in there because you've got this clear support area already drawn. Okay. And off we go more to the upside. So once again, here the green candle has risen far above the 3 moving average. You might not have seen the compression and eventual breakout if you were just looking at price. There's a lot more confusion, but the 3 MA is smoothing, and it gives traders a better sense of where price is actually going. And so you can hang in there and look for this breakout above the resistance area, and off we go to the upside. So let's look at some chart examples just with the NPI graph, and I'll show you how we put the 3 moving average and horizontal lines on the graph. Okay, so I'm seeing some questions. How do we do this? So let's get ahead and do it. All right, so here is, again, we're just looking at the stock viewer, and I'll just go to graph all. So we've already got the NPI on our graph, and again, we got there by clicking on graph layouts, and then the NPI near perfect indicator layout is what I'm using. Everybody has access to that. You can see it highlighted in blue. All right, so now we want to put the 3 moving average of price in the upper portion of the graph. So we'll come over here to price and right click, add moving average. We're looking for a simple moving average. We'll start with the 10. It drops it down to the bottom of our graph panel, and we use the down arrow to bring it all the way down to a 3 moving average. I'll left click on it to highlight it. I'll take off price. I love this about VectorVest. I'm personally not aware of any other software where it's so easy to toggle price on and off, but I can just toggle price off. There's our 3 moving average, and I'm going to right click on that 3 moving average of price, change the style, and I'm just going to make it thicker. I like the color for the white background. It's fine. If you're using a black background, you'll use some different colors to make them stand out even more. But now we have our 3 moving average. Just checking to see if everybody is with me so far. All right, looks like we're all doing good here. All right, so what I'm going to do now is just draw those horizontal lines on the tops and the bottoms, wherever there's an inflection point in that 3 moving average. And I'm going to try to identify resistance areas, support areas, and compression. Let's see if we can do it. Normally, when I'm looking to make a trade, I'll just start at the right edge and work my way to the left. For this exercise, I'm going to start at the left edge and work my way to the right. So let's have a look. So there's our horizontal line up here, top, sort of left in the middle here, and I'll just left click to activate that line. And there is my first line. It's a blue thin line. Now you can right click on it and make it a bit thicker if you like. I don't want to make my chart too cluttered, and if everyone can see the thin line quite well, I'll just kind of leave it where it is, okay? And if you do make a change, make sure you click on Advanced and Set as Default, and that'll allow you to set up the rest of the lines. So I'm not going to make that change. So there's a peak here. We had another couple of peaks here. Notice some tops here, a bottom here. So now already I'm seeing that we're in a compression zone. Is everybody with me on that? No, this is NVIDIA. And if I put on my date line, really, we first got above resistance over here to the right, even though the aggressive trader could have come in early because the 5 moving average of RT crossed above the 40, and it was a pretty nice entry here. This would not have been a good entry, even though the 5 and 40 crossed. That was not a good entry. This was a better entry. You're getting in at a relatively low price, $457. But if you waited to here, you're in an expansion zone. You still see the 40 moving average of RT slope is rising. What a great entry. And away you go to the races from there. And then you can just continue to draw your lines. So once you, oops, and I guess I got to go back to the horizontal line. So every little inflection point, you might just draw your line, creates another support area. And so if you're looking to trail your stop up, your new stop would be just below this support zone. And you set your stop with your broker and you're ready to go to the next one. All right. And this really does not take very much time at all to do. Now, if you're still not in the stock and you just desperately want to get into NVIDIA, Dr. Toledo wrote about it years ago, saying it's the best stock in the database. So you might want to get in. Well, now you can see where you want to get in once you get above this resistance zone, and there's your opportunity. And guess what? You've got the 5 and 40 of RT crossing below. All right. Yeah, Renee says it's easy to see this in retrospect. So how do you see this, before it all happens? So want to do that. We want to go into some graphs, Renee, and everyone where we can see that. But just keep in mind, if I just take my date line back, now you folks tell me, type in a 7 as soon as you see an entry opportunity. Just type in a 7, and maybe you haven't seen the rest of the chart. If you look down, you didn't. So let's just see if we can find out the area where we might go in. So I'm just going to move the chart forward now, one day at a time. Not seeing any 7s yet. So now we can check over here in the graph panel. The 5 moving average of RT is still at 0.71 and the 40 is at 0.80. So we don't have a cross yet. Let's go over a little bit. So I'm all the way to the right edge now. Now we have RT5 at 0.82 and RT40 at 0.81. The 5 moving average of the stop is still well below the 40 moving average of stop. I'm starting to see some 7s. Starting to see some 7s. Wonderful. Okay, so you have an opportunity there at $12.30. Now you can wait and see we get more thrust of that 5 moving average of RT, more thrust of the 5 moving average of the stop. Now we're at 12.30, so really a price action hasn't followed as quickly as we'd like, but now we keep moving up. And we're up to 12.50. And that's where we're going to be stopping, right about there. Oh. So now we just move forward. I'm trying to move both my date line and the year or the date line ahead. So there we're at 14, so we're up $2 on a $12 stock, and we got in at a great time, and it just kept going. So that's how you would do it. And if you had your horizontal lines, you would see the support back here. I should have been drawing those as we went along. So we're looking for that breakout area. A little bit of inflection there. So we're just trying to catch the tips and then a little bit of a pullback. And that's kind of the way the stock price moves up. It'll move up strongly, pause or rest, give us a little pullback. We draw our inflection line, and then so we see this congestion here, but what a great entry this was right here on the cross at about $12.30. I see lots of 7s now coming in. Okay. And Brian's asking about NVIDIA with the price split coming into effect next week, and if anybody has that answer for him. But there's how you use it, Renee and everyone. So hopefully you see how easy that is to set up on your graph, okay? So if I just come to the, let me just go this way to Canada. Works the same in Canada. And I'm just going to go to some stocks that I've been holding and show you how it worked for me. And you can kind of follow along. Again, here's just the VectorVest simple graph layout. I come over to the graph layouts tab, and I'm going to change to the near perfect indicator. There we go. I'm going to right click, add my simple moving average, make it a 3. And there we go. Take off the price. And I'll right click, change the style. Repetition, 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 right? And so it's pretty easy. Again, you can see where there's temptation back here at the left. And you could certainly have made a trade here. You got a cross of the 5 and 40 RT here. Got another cross here, but you're kind of in a little. Of course, you only see the horizontal lines as you're drawing them back here at the left. So here we see we did get a breakout of sorts, and then it pulled right back. So you might have been stopped out. But here, what a great entry. Buy rated, Nice inflection point with the 5 moving average and the RT down below, and you're into the stock. Here's Dollarama for people like Susan and others who are longer term investors. This is a terrific entry on that. So Dr. Toledo always loved these flatline patterns, and really what we're looking at is compression. And then when we get the breakout, we have expansion, and we follow this 40 moving average, the slope, giving some wonderful entries. Yeah, Glenn, one of our fellow traders from Lethbridge here in Alberta, says the 5 and 40 cross gets you into the trade, and the 5 MA of the stock price keeps you in it. Love it. Yeah, it's so great. All right, so I'm going to just go back and show you a couple more things. I love this technique of Dr. Starr, and so I want to just show a little bit more on that and then we'll look at some more graph examples. And if you have some stocks that you're thinking about, now we will go to the Pro Traders search and try to identify some trading opportunities for next week from that search, and I'll use your help to do that. But let's just have a look here. We've done that setup with the 3 simple moving average. The other indicator that kind of completes the trend locator, Dr. Starr adds a fast MACD. It's the 8, 17, and 9. And it generally follows that 3 moving average of price quite nicely. But then it'll veer off, and the MACD line detects a potential bearish divergence is what we're looking for mostly here when the 3 MA hits a higher high, but the MACD line hits a lower high during the same period. Now, something that I've taken to doing on my graphs, and you might like it as well, and that's just putting on the percent volume to show the percent change in today's trading volume compared to the average volume. And what I love about it is that it just absolutely highlights the unusual volume activity with large spikes. So when we're looking to enter a position and we look to the left and we see that the percent volume is up 50% or 100% or 200%, we know that there's conviction and buyers are heading into that. Usually it's the institutional buyers driving that price higher. So it's just another way to study the volume, and especially the unusual volume. So again, let's look up some chart examples. Set up your NPI graph with the 3 moving average, the fast MACD, and the percent volume. So just to give you that explanation here again, and I got to find my, there we go. All right, I'll go back to the stock viewer here. I have some other watch lists that I've set up that we can look at, but let's look at the stock viewer, sorted by value, safety, timing, always a great place to start. And I'll hit the graph all. And so we've already set up the 3 moving average, simple moving average of price, 5 moving average of stop, 40 moving average of stop in red. And then in the subgraph, the lower portion, we have our 5 moving average of RT and the 40. And again, you can change the color scheme on these. You can change the thickness of your lines. Notice on the 5 moving average of RT, I've got the middle thickness, which is my preference, and I like the green on the white. And I'll show you how the setup looks in the black screen just a little bit later. All right, so here we have NVIDIA again. So now what I'm going to do is come up to add parameter, technical analysis. So everybody has this subfolder here. And I'm just going to add the MACD to the graph panel. Check the box. And now I need to make some changes. So this time, when I right-click in the MACD box, I want to change the settings, right? So I'm going to change that first EMA period to 8 and the second EMA to 17. I'll leave the signal line at 9. So this is our fast MACD. I'm going to right-click again, change the style, and I like a little darker color on the MACD style. Signal line, I need to change to a color that's the same as the overall background, so that's white, because I'm not interested in the signal line. Dr. Starr doesn't use it in her setup and teaching this methodology. So I'll just make that white, and then I like the histogram to be a brighter color. All right, did I change that style to a little bit thicker here? There we go. All right, now this one I think you'll find very useful, and you can toggle it on and off. And I'm just going to go to Add Parameter at the top of the graph panel. I'm going to click on Price Volume, and there's the percent volume change. So I'll left-click on that, and I'll activate that. And it's just got a fairly good color here for the blue, and it stands out quite well. So now, when I'm looking potentially at a buying opportunity, and here it is here, where we've broken above this compression zone on January 9th. Okay, and I know many of you were in NVIDIA long before this, but then we had to live through this little compression and uncertainty where it wasn't moving very much. But what a buying opportunity we've got here. And in terms of the percent volume, it's 90% higher than the 50-period moving average of volume, the 50-day moving average of volume. So that's a pretty good volume spike showing buyer interest, and we can enter the position. And the nice thing about this setup, again, everyone, we always have to manage our risk. We have to manage our risk. It's so important. Can't emphasize that enough. So let's click on the freehand line. And as we're moving in on this buy area, we notice we've got the compression zone here, so we can set our initial stop just below the 3 moving average and these horizontal lines, or if we want a wider stop, we can come down below the lower line, and that's our stop price. So we control our initial risk. And we have that breakout in the expansion zone, and now we can move our stop price up below this next support area and follow it up from there. And we might put another stop in here, and we would have gotten stopped out. Or we could say, you know what, I don't mind if it comes down from 873 to 800 at this area. That's a pretty big drop though. So we'd probably be selling here, and then we can come back in here when we get back into this expansion zone above the resistance area. Thank you so much, Carlo. Yeah, wonderful. Thank you so much for the comments. And it looks like everybody is getting this. I'm just looking back here at where we're at. So here's another one. When we see, again, we can always look over at the right and see this was a 5,000% increase. Now, it just is new into the system, so probably more important volume indicators are over here, and that's a 900% increase in volume above the 50-period moving average of volume. So that's a great entry there. You might think, well, there's kind of a lot of resistance here as I continue to draw my lines. So we're in a compression zone here. So even if you waited until we get out of that zone and came in there, I think you would have been very happy with the results of that trade as well. All right. All right. So any other questions on that as we go through? I want to go just to Canada one more time. All right. So here's Canada. So let's just look at a stock here. I'm going to pick Suncor, certainly in Canada, Alberta, but really everywhere in Canada. Investors are familiar with Suncor, and the petroleum stocks have been mostly doing well. So here's Suncor. And so I just wanted to show us again, and notice after I've set up my graph with that initial layout, I can come to the graph layouts tab and I group them according to NPI. So I've got to find NPI. Notice I've got different layouts for the NPI. And here's NPI star trend locator white screen. There's the black screen here with the BS. Well, here's the white screen. So now I'm all set up. I can toggle price off. And how many of you jumped into Suncor after the rally? And I know I've got friends who have never gotten out of Suncor. I think one thing VectorVest has taught a lot of us is buy and hold. You don't have to go that way unless you have other reasons for dividends and so on. But how many people that did get into Suncor? And if you did, wouldn't this have been a great time to, well, maybe you're just a little bit further along, but you've got a volume spike of about 199%. And then as it continues along, you get a new buy rating. You've already got the 5 moving average of RT above the 40, and the slope is going up. So yes, you could have been more aggressive back here. I wasn't, but this made a nice entry over here. And that was at about $48 and got up to there. And so right at the end, you just make sure you're drawing your lines and put your stop in below the area where you want to be. All right. So I wanted to show you that one. And it's amazing how fast time goes here, right? But let's just have a look here back at the slides if I can get there. All right, so Hurley's challenge, I just draw your attention to this. I didn't hear back from Jim, but I did want to just share. He puts this on Facebook. It's the Hurley challenge. And he talks about buy undervalued stocks, rising in price, rising market. It's got some current holdings. He changes the safe and sound. It's a prudent search. And he increases the price to $10, increases the relative safety to 1.15, and uses an RT sort. And it delivers some terrific stocks. But what I noticed is it really helps after you've run your search to look at the NPI, and especially with Dr. Starr's trend locator, you can get that excellent entry using that technique. So as we do that, we can see resistance, support, compression, expansion, and then putting in your stop prices along the way. So you can see a nice little stop there. As price moves along, you might put your stop under this support area. And you just keep trailing your stop up because, again, risk is the name of the game, but you don't want to sell too early and miss out on that 2-3 stocks that go up exponentially and can make all the difference in your portfolio. All right, but I'm just giving you the technique for how you can set your stops below the lines that you draw all the way along. All right, so with that, I'm going to go back to VectorVest 7 very, very quickly. I'm going to go to Unisearch, and you'll notice if you have the ProTrader add-on module, you have a folder called Near Perfect Indicator. And I happen to like the NPI crossing within the last 3 days. So that's what that means, NPI crossing 3 days. So it gives us more stocks to look at if you're not just trying to catch them the day they cross. The RT crosses above 5 above the 40. This can be crossing anytime in the last 3 days. So this is the search as of the close yesterday. And just very quickly, you think the stock has merit to make a purchase next week, type a 2 in the chat box. And if you don't like it, type a 3. Let's go here. And I'll start drawing my lines. And again, because I'm looking to buy this in the next little while, I'm just going to focus on the right edge. So I'm drawing my support area lines, little bottoms here. A little bit of a notch here where it paused on the way up. And then additional support here, connecting the bottoms here. Volume, it doesn't look like it's huge, but for example, there's 68% volume spike on this day. What a great buy it was back here, right? Renee's got it absolutely right. We all do better in hindsight. That would have been a great buy. So I'm seeing some 2s here. So people are kind of liking this. What I would do on this one is put it in a watch list. And on Monday, as soon as it crosses above this price right here, or this line at $66, that would be a terrific buy. You've got an inflection point. You've got the, again, the RT5 crossing above the 40. And the MACD, which I didn't focus on as much as I should have, is following price quite well. Notice here, and this is the purpose of the MACD, we see just a slight divergence, a bearish divergence where price is rising, but the MACD is not hitting a new high. And so it's a little bit of a cautionary tale. It did drop in price, but now it's looking much better. So this one, again, 2 if you like this for Monday, 3 if you don't. We want to make sure we've got our horizontal lines. So we start over here at the right edge, and there's our first area of support there, but we had some additional support here and here, here, and certainly here. So we've broken above this compression area. We've broken above resistance, but pulled back to another support area, and now we're off. How many like this one? I'm seeing lots of 2s coming in here. Elizabeth, we're just looking for the trend with the MACD. So we just make sure we block out the signal line and just focus on the trend. You can focus a little bit on the histogram, but really it's the trend of the MACD. And so what we're looking for is these divergences. So back here, for example, whoops, and I've got my horizontal line. So back here, for example, and after you've been doing this for a while, these will just jump out at you. But for example, here, MACD line is rising and hitting a new high. Hasn't quite happened yet with price, at least with the 3MA, 3 moving average, but it foretold a continuation. And certainly that's exactly what we got. So that was a nice entry there as well. All right, folks, I've given as much time as I can to this. I would love to have gone through some additional charts using the Hurley challenge stocks because it gives some wonderful insights. But I've shown you the search that I like. I've shown you the volume, unusual volume, and how that can help you make decisions. Look at these volume spikes on NVIDIA, 233% heading into an expansion zone. These lines you don't see until you make the entry here, but now you see you've got a little bit of compression and then wonderful rally from there. Elway, don't buy here because resistance is too close. Here's the resistance lines that you drew over here at the left. And so don't buy, even though you got the 540 moving average cross. Here you got 420% volume spike and a rise above the resistance that was created here. Pretty nice opportunity. And there you see, again, you've got resistance, so don't buy here. On a new, this is where you want to sell, don't buy here. And you can come in again here. All right. This is what it looks like on a black screen, and I do like the black screen. It shows up extremely clear. Usually in presentations, we prefer the white screen, but this is the black screen and how it looks. This is a yellow moving average of the 40 stop, and then the blue, of course, and a black signal line here. All right. 2 built-in searches I've shown you. So just a summary, run the NPI search to open your favorite watch list if you don't have the Pro Trader. Go to graphs and select the NPI near perfect indicator from the graph layout panel. Add the 3 simple moving average and remove price. Add the MACD with the 8.17.9 settings, which showed you how to do that. Change the signal line color to the background color to remove it. Add the percent volume, and again, you can toggle that on and off so your chart doesn't look too cluttered. And of course, you can toggle price on and off as well. Use the horizontal line tool to highlight the tops and bottoms, starting at the right edge if you're looking to buy from a new search or a new watch list, and then work back to the left as far as necessary. And seek to identify expansion breakouts above resistance on significant volume. And I look for 100% or more, certainly above 50% is unusual volume, but the larger the volume, the more conviction the buyers. And I think that's just the way to look at that opportunity. Jimmer, thank you so much for your comment. That's very kind. I hope you enjoy it, everyone, and got a lot out of it. I hope we'll do a bit more on this as we move forward. But I just love this, and it was such a pleasure connecting with Dr. Starr, getting her insights about how she teaches this. And when she presented it to the International Forum 8 years ago, it really was exceptional at that time, and it's still just exceptional. So it's nice to have it as another tool in the tool bag. All right, so there may be a question or two, but I just really want to just emphasize this retirement portfolio transformation. VectorVest is offering this for free to subscribers or members for the first time ever. It's a real gift because we've talked a lot, and Susan really focused on this tremendously as well, about just finding those great quality stocks and learning to build a safe growth portfolio, generate steady income using dividend income, getting paid with covered calls and puts, and portfolio insurance. And a bonus on this, and Jim Penna, retirement manager, is one of our lead instructors, of course, on this, how to trade spreads for monthly income. So it'll be a wonderful course, and you have the opportunity as a subscriber to just come to the home page and open the special offers and register to take advantage of this. I'll just show you how that works. If I take off my special offers, usually I don't have them residing on the home page, but just come up to the home page tab toolbar up at the top, left click on the configure icon or wrench, and just come over to special offers. And it pops up there. I can click on the wrench again, And now I can just click on special offers and it's going to take me to the page. And again, complimentary for members. Pretty amazing. Starts in about 10 days. So lots of time to get in on it, and you won't be disappointed. And just for those of you that are not a VectorVest member at this moment, you can certainly join us for 99 cents a Memorial Day sale. Try VectorVest for 30 days. And once you're a member, you'll see that opportunity to register for the retirement transformation. It's at vectorvest.com/YT. And I think Ray is still with us, and he's chatted that into the chat box. So you've got an opportunity there. So again, it's only for members. It's exclusive to members. It's never been offered, certainly for free. So I think it's a tremendous opportunity, and I hope you take advantage of it. Folks, I hope this was really, really helpful to you. I really was excited to be able to show you the near perfect indicator with just another layer, a technique of avoiding those false breakouts and taking advantage of the best opportunities to make those trades. I hope we accomplished that. And again, really want to thank you for that. And of course, the replay, the recording will be available on YouTube. It's going to reside there, be archived there. It'll be there immediately after the webinar. I know sometimes we go a little fast in these presentations, but it's all there for you. And of course, there's our support numbers and international numbers. Folks, thank you so much. If there's a burning question, I'll try to answer it, but I think I've gone a little bit over my time. But wonderful to see so many faces, Mira and Stuart and others, Glenn and so many. Tom, wonderful to see you as well. Our friends from Ontario. Tim, thank you so much for your kind words. So awesome. Robert, good to see you as well. So, Susan, I think I'll just turn it back to you.
Perfect. Well, thank you very much indeed, Stan, for all of that. And I think I had said earlier on that I would summarize what you had done, but you know what? Actually, the comments on the right-hand side of my screen anyway certainly has been doing that. I have tried to get back there to everybody and to anybody who sent in a comment directly to me. I've answered. Ray, thank you so much for being in the background there, answering lots of other questions. Stan, I think you did address nearly, if not everything, as well in all of your responses. Questions were coming in there as well as we went along. I know awesome. I didn't get to follow up there with you on to everybody after I had said that I would talk about how to look at copper, particularly in Australia. What I was going to do was show you the industry viewer in the program on VectorVest Australia. So if you go in there, I have it open here on my own screen. If you go into industry viewer, you will see that the second fastest moving industry in the industry viewer in Australia is ETFs commodity, and that would be your starting point. So I know we didn't get to share everything and go through everything on a step-by-step guide, but you can certainly take these away and implement them yourselves. Last thing, of course, that I want to mention is that there are the various different offers there that Stan mentioned. Ray has been putting links to those there in the chat. And of course, if there's anything at all that you need us to follow up on, please do send a message into support@vectorvest.com. Final thing to say is, of course, a massive thank you to Joy, who has been there making sure that you can see us and hear us. And thank you to those of you who said you needed your fast ears to listen to me, because you also need your Irish accent ears to listen to me too. And Stan, there's been a lot of lovely comments in there asking you to come back more often from your retirement. So we'll see how you take that on board. So to Ray and Joy in the background, to all of you in the foreground, and to Stan, thank you all so much for being here, and we'll see you next time.